this store, along with other Macy's stores, opened at 5 p.m. yesterday. What kind of traffic are you seeing both in store and online?
So online, it started early and it started robustly. So the online traffic has been terrific. And online is actually great because you get to see how it's tracking by area, what are the great specials, what are the great values that are resonating. We opened up yesterday at 5 o'clock. I was here to see the great crowds. Heavier traffic than last year. The start has been strong. It was really all up until about 2 a.m. when we closed most of our stores, and then we reopened today at 6 a.m. And it started out well. So far, so good.
And do you have a sense of what people are buying and, crucially, how much they're spending?
So as you know, Emma, you think about cold weather, it's certainly been cold in the Northeast and in the North. So all cold weather products, coats, sweaters, boots, all doing well. But all of our merchants work after the end of each holiday season on all the great values with their brands. They create exclusive content and make sure it's packed with value. So earrings or diamond studs has been a hit. We've worked in fragrances on gift sets. We've worked in a home store on like slow cookers and air fryers. Lots of success stories across the store. And
are you seeing a significantly more confident spender consumer this year? Certainly wage growth and household income growth would point to that.
It is a great consumer spending environment. So record low unemployment, consumer confidence is high. And it's a share game out there for retailers. And omnichannel retailers got to be on their game about making sure they do not disappoint the customer online, in stores, and everything in between through mobile. So yeah, we're all focused on this consumer.
Now, as we look out across this store, you can see it's packed both with shoppers but also with store associates. You mentioned the tight labor market there. Was it significantly more competitive as you look to hire extra seasonal staff this year?
So knowing what the unemployment rate was and how the economy was being forecasted for all of 2018, we started early. And so in this one, we basically focused on how we're going to make sure that our existing population of full-time associates, or we call them colleagues, are happy, they stay longer. So we started an path to growth incentive program that every quarter, every single non-commissioned colleague has a stake in however that store or call center or warehouse performs, they get an extra incentive.
And when you talk about incentives, you're also talking about paying people more here.
Yes, and we're paying people basically in any market that we are competitive, but we've got 94% of our colleagues are making a quarterly incentive, plus about a third of our colleagues are on commission. So depending on whatever they sell, they get incremental sales on top of their straight wage.
And so do you think that's helped you stay competitive against your competitors? Obviously, we heard from Amazon, they had lifted their minimum wage to $15 an hour this year.
It's definitely helping us. So when you look at our turnover rates, which is probably the best example, turnover rates are down, and our ability to hire these colleagues has been stronger than ever, so we've hit every one of our targets. So we are ready for all of this right now in the consumer spending environment.
Now, expectations for spending this weekend and, of course, the holiday season as a whole have been sky high, given the favorable macro conditions that we discussed, but also the kind of investments that you and your competitors have been making in stores and online. How confident are you of meeting, if not exceeding, those expectations throughout the whole of the holiday shopping season?
So I think the big question on everybody's minds is whether can retailers comp the positive comp they had in the fourth quarter of 2017, and we're well positioned for that. I think also when you look at an omnichannel retailer, they have a higher penetration of digital business in the fourth quarter. You take all that momentum with you. I think the headline for Macy's is that our stores business is much better. It keeps improving quarter after quarter based on the investments that we've been making. And our digital business with mobile now is going to hit $1 billion in terms of mobile transactions. So investing in all three of those things has really helped our overall business. And we're going to be able to take care of the customers in the fourth quarter this year.
Now, of course, you mentioned investments, and investments come at a cost. And certainly investors were slightly disappointed that you didn't boost margin guidance when you released your third quarter earnings a couple of weeks ago. How can you boost those margins, or how long will investors have to wait to see those margins go higher?
So what I'd say is that when you look at, we're really working on our merchandise margins. So when you see the merchandise margins, you saw really strong growth there. But as all omnichannel retailers, you have increased shipping costs. So we're looking at offsets on all of that. And when it depends on each business, we have some businesses that are returning a higher profitability rate, depending on where they are in their cycle of development. But overall, you will see improvements in years to come.
And do you think investors will be happy with that when you produce your next set of earnings results?
What we know is that when we layer on profitable growth that takes care of customers, the overall brand will win. We're focused on market share. We're focused on doing those at profitable levels. So that is definitely our pursuit right now.
Were you a little bit disappointed with the investor reaction to your third quarter sales? Because you beat when it came to comp sales, when it came to earnings per share, when it came to revenue, but yet you saw the stock fall. Is there a higher bar for Macy's investors?
If you would listen to what I said to all of our colleagues, I'm very, very happy with the progress that we're making. I mean, our strategies are getting traction. We've got a very engaged colleague population. I know that over time, as we take more market share and we do it at profitable levels, the brand is going to win and the stock price will go up. So I'm taking a longer view of this.
And speaking of taking more market share, it is a very different retail environment given the loss of Toys R Us this year, the loss of Bon-Ton. We've seen Sears file for bankruptcy. How aggressive are you being in going after those sales?
So when you look at it's different, is affecting our business differently. So when you look at toys, we certainly have those. We're not a strength in toys, but we're certainly competitive. And we saw the opportunity when you looked at Babies R Us and Toys R Us going out of business. We were very aggressive about going after the Bon-Ton opportunity. And because a lot of the Bon-Ton business was on brands and categories that Macy's does quite well in. So we went after those. We knew exactly what their market share was, where those businesses were doing in each of the stores in each mall. In many cases, we went after those amazing colleagues at Bon-Ton, and many of them are now working for Macy's. We went after their customer lists. So when you look at businesses like cosmetics, which was a big recipient of this, and some of the branded sportswear categories with the big names, I'm very satisfied with the shares that we're gaining based on the Bon-Ton exodus.
And you also mentioned your other investments recently and your changes to strategy, particularly store strategy. One of the things that you announced very recently was that in the vast majority of your stores, you call them neighborhood stores, you're actually going to reduce the store footprint.
Yes.
Why not close those stores?
Because they're profitable and customers love them. One thing that we learn about all of our business is really how the customer shops. So when you look at, in many of our stores, they shop cross-category, cross-channel, but also cross-stores. So most of our core customers shop in 2 or more stores, but they use them differently. In many cases, that neighborhood store that you're mentioning, they use for fulfillment, or they use for those basics like advanced night repair or underwear or socks or summer holiday items. Or summer commodities. Other stores they go to because they want the full breadth of the assortments. So knowing the interplay that goes on with these stores, there's a reasonable hypothesis for the existence of each of them.
It's still important for Macy's to have this really large store fleet.
And what we did, when you think about this, Emma, like a year and a half ago when we reduced 100 stores, we're at the right portfolio size right now. When you look at each of these markets having the right mix of neighborhood and magnet stores and flagships, I think we've got the right chemistry.